All right, we got a lot to get into today, so buckle up and let's get into it. First up, we got First Republic Bank. According to Watcher.Guru, it's down another 37% today in the midst of the rumors of a government takeover. And Benjamin Cohen says he cannot wait for crypto assets to get the same type of protection as securities. This security looks real secure, doesn't it? I bet its investors are really happy that they have the government protecting them from real big dips like this. This is a sign of cracks continuing to form in the system and that the government was only temporarily able to hold up the banking system with those short-term bailouts that we saw about a month ago. In the last bailouts, we saw the FDIC covering all of the deposits, even the ones over $250,000, and if they continue to do that, well then they're going to run out of money because they only have so much. And it's taken them since the last banks started to collapse back in 2008 to build up what they have so far. Altcoin Daily had a really good piece about this like yesterday.
Yes, there's FDIC insurance, but the dirty little secret is there's not enough for all banks. Keeping track, FDIC Deposit Insurance Fund right now is about $128.2 billion, of course minus what they spend on Signature, that's around $2.5 billion, minus the Silicon Valley Bank costs, that's minus another $20 billion. So right now, today, again, using their public numbers, the FDIC insurance balance is about $105.7 billion versus the total insured deposits, $10.1 trillion, and total U.S. commercial bank deposits, $17.5 trillion.
I was talking about this back whenever the other banks were starting to collapse and saying that whenever the FDIC does run out of money, the Fed is going to have to print and refund their fund so that they can continue to bail out banks. As you can see, they only have $105 billion left, and if another five banks the size of SVB collapse, then they're going to be totally out of money. And then they still have to insure more than $10 trillion worth of total insured deposits, meaning that if more banks continue to collapse, then the Fed is going to have to print money and fund the FDIC, meaning that inflation is going to continue to go to the upside. The question is, how many banks are going to continue to collapse, and when is it going to happen? The FDIC might actually start to run out of money just in time for the Federal Reserve to launch the Fed Now in July, which is the Fed's CBDC or central bank digital currency. Also in July, it looks like they're probably going to have to make a decision on whether or not to raise the debt ceiling and for the government to continue spending money. And with the economy continuing to collapse and taxes probably being lower than expected, I don't know where this money is going to come from other than if the Fed continues to print money. And with all of these things coming together later on in the summer, it looks like this is probably going to be about the perfect time for them to release this Fed Now so that they can start to fund all of these things that are going to need funding and so that they can put expiration dates on your money so that you won't continue to make inflation run out of control. Eventually, something is going to break. Like yesterday, we got the GDP for the Q1, which was 1.1% and almost a whole percentage point lower than expected, with the forecast being 2% and the previews being 2.6%. This means that the economy is starting to slow down, and with these banks collapsing and the debt ceiling coming up, I think something eventually is going to break, and then the Fed is going to have to start printing money again sometime in the summer. Some people even say that they've already started to print money since they added about $3 billion to their balance sheet. Also, as you can see here by the 210 yield curve, we've been having the biggest inversion since we've seen since the 70s, and it is actually starting to curve back to the upside, which does happen right before a huge recession starts to hit. So this could be an indication that we're going to be seeing a bigger recession later on this year, but people are still expecting an 85% chance of the Fed doing another 25 basis point hike in the next meeting. As the economy continues to fall off a cliff and these banks collapse, if the Fed does continue to raise rates, then we're going to probably see these rates work their way through the economy with long and variable lags. And even after the Fed does pivot, we're going to continue to see these interest rate hikes working their way through and devastating the economy for months to come. They say that these rate hikes take about 12 months to work their way through the economy. And right now, if this is what's causing these banks to collapse, we're probably already just now starting to see the first interest rate hikes that the Fed did back about a year ago. And we're going to be starting to get slammed into by the 75 basis point hikes and higher ones than what have already made this happen so far. So taking all of this data into account, I would say that the Fed should probably pause interest rates and then wait to see what kind of an effect they have on the economy, and then maybe even pivot and lower interest rates later on this year. But as we know, the Fed always overdoes it, and I think they're going to do that again this time. So I wouldn't be surprised if we actually do see the Fed do this 25 basis point hike here, and then we might even see them do yet another one, as we've recently learned, because the Fed actually got pranked by some Russian pranksters that were posing as Zelensky, and they recorded him basically laying everything out and not beating around the bush like he does in all of his meetings. I'm not exactly sure what day that was recorded on, but he says in that they're going to be doing another 25 basis point hikes because it's already priced into the market, and they basically might as well get that out of the way. Let's check out the video now.
Just say it's a great honor to speak to you today. I'm glad you made time to speak to me, and
what a fool.
It's just great to be with you today.
And
how did they get through to him, though, really? Like, no one vetted this, or no one verified that whoever was making the call was actually Zelensky? How is it that they don't know his phone number or something like that? Like, and then it doesn't even really sound like Zelensky. I guess he would have a translator, but still, it just seems pretty ridiculous that this guy is running basically our whole economy and deciding when to manipulate our currency. And yet he's still so naive that a couple of Russian pranksters convinced him that they were actually the president of Ukraine.
do you have your prediction about inflation in the US?
I do, yes. Our policy rate quite a lot last year in order to slow the growth of the U.S. economy and enable inflation to come down, and we think that's working now. And I think we're very much on track to get inflation back down to our target, which is 2%.
He's basically talking like he obviously doesn't talk in any of his meetings. He's just getting straight to the point and saying that they've actually raised interest rates a lot this year, he said, word for word, and that he thinks that inflation is on target to go back to 2%. This is what he was saying he was expecting before he could start to lay off of the interest rate hikes, and it looks like we're actually obviously getting to that point now.
A lot depends on what happens in Ukraine on that. And what happens with Russia and their energy, and also with the opening of China.
If the rate is raised further, the standard of living of the population will fall. So how much should it fall in order for the Fed to stop raising the rate?
You know, we've raised rates quite a lot, and the market is already pricing in two more quarter percentage point rate hikes. We'll look around after we make those two, and we'll say, should we do any more? And then the question will be, how long do we keep rates at this level? And I think we'll keep them there for quite some time.
So it does look like, depending on when this was recorded, there might actually be 2 more 25 basis point hikes coming, and then they're going to pause interest rate hikes and hold them there until probably something breaks and the economy just totally starts to fall apart.
Because the decrease in inflation is clearly less than we would like. And if it starts to rise, is the Fed ready to raise the rate sharply again?
Yes, of course. We will. If we need to raise our rates more, then we'll absolutely do that. We raised rates very sharply, historically sharply last year to get to the place we're at now.
In other words, does the Fed think that inflation should be reduced to 2% at any cost?
Well, so we think we do need to reduce inflation to 2%. That is our obligation. But I think the path there, as we walk that path down to 2%, we'll also be considering, not at this point, but a little further on, we'll be considering, the effects on the labor market as well.
Well,
So basically, if they don't start to actually get inflation down to 2% before unemployment goes up probably over 4%, then they're going to have to start to cut interest rates because they have the dual mandate. Their mandate is basically to keep an unemployment rate under 4%. And if it starts to go over that, then as I've said before, and as everybody says, obviously, those interest rate hikes do work with long and variable lags. So if it gets to 4%, then that means it's probably headed up to like 7% or something like that. Eventually, the unemployment rate might become more of an important issue to take care of than the inflation rate, especially if unemployment is headed up while inflation is still headed down.
And it's older people in particular have dropped out of the labor force, have retired, and they don't want to come back because they don't want to take any risk on COVID. But the U.S. labor force has really shrunk since COVID in a way that's very surprising. And that's so we have a labor shortage in a way. We have a shortage of available workers, and that's part of what makes it hard to get inflation down. But what we're going to find is that growth in 2022 was positive but modest. It was subdued. So,
It's true that we've had a lot of people retire, and those people are not coming back. Also, as we're starting to see all of these layoffs, I think a lot of these jobs are going to be replaced by AI, and we might not be seeing these people coming back into the labor force either. Eventually, they're probably going to have to do universal basic income, and that's going to be definitely provided in a CBDC as well. As people continue to be replaced by AI, they might be filling some of the positions that aren't being filled right now because there's just not enough people to fill the roles as it is. But it's going to take time for people to find other careers whenever they do get replaced by AI. And I think between that and all of the people retiring, we're going to have a lot of people that are going to be staying out of the labor market for quite some time. It looks like Jay Powell is not going to quit until the economy is totally dead and he has to print to bring it back. But what's going to break first, and can Bitcoin actually be a flight to safety? Well, the first one is anyone's guess, but Bitcoin was literally built for this exact situation. People call Bitcoin digital gold because it's limited, it's hard to confiscate, you can take your own possession of it, and no one can just print a bunch of it because there's some kind of issue with the economy. And if you have an ounce of pure gold, then it's basically as good as anybody else's ounce of pure gold. These are also all qualities that Bitcoin has, but Bitcoin is better than gold because it's easier to move, meaning that you don't have to actually take a bunch of huge weight and a huge shiny rock and actually move it across borders. It's easier to conceal, and it's harder to confiscate. Plus, if you have your private keys memorized, then you can basically keep all of your Bitcoin in your head and go wherever you're safe, and then just basically start your life over there. It's harder to do that with gold, and you risk having your gold confiscated, not to mention even the US made it illegal to own your own gold back in the day. And that could all happen again. On top of that, all kinds of gold is always found all over the world. It's just a matter of digging it up. And one day we're going to probably find asteroids and mine them, and there's going to be many times more gold than what's available right now. People like to compare the time that we're going through right now to what happened in the 70s with the runaway inflation and the Fed making all kinds of mistakes back in those days. And in those days, gold went up an astronomical amount, increasing by about 2,837% in the span of just a few years. Starting in 1971, whenever Nixon took us off the gold standard, gold went on a huge bull run, and it didn't even stop until 1980. The reason why this happened is because this is how much the dollar went down in value against this shiny rock. But why isn't this happening right now if this time is comparable to what happened in the 70s? Well, it's because of what I said about how gold is being found all the time, and because the price of gold is heavily manipulated by institutions like JP Morgan. Not to mention, we're always getting better at mining gold, and this is why Bitcoin is actually better than gold. Gold and bonds have historically been good investments in recessions because whenever the stock market continues to suffer from bad earnings, people are going to look for alternative investments, and treasuries have historically been one of the safest investments, right along with the shiny rock. But nowadays, people are starting to lose faith in the US government, and as I said, gold is totally manipulated. So people are going to start to look for alternative investments where they're not going to be harmed by bad decisions that government officials are making, and where they're not going to be harmed by bad earnings. And this is why I say that Bitcoin was exactly built for just this situation, and you might not have known that there was actually a secret message in the Genesis block, which was the very first block on the Bitcoin blockchain, and the message said, "The Times, the 3rd of January 2009, Chancellor on the brink of the second bailout for banks." A lot of people think that this was a message directly from Satoshi Nakamoto saying that he built Bitcoin for the next time that banks started to collapse so that people could opt out of the traditional finance system and find some kind of actual real money where their money wouldn't be devalued from all of the printing and bailouts by the central banks. This is the article in question, and as you can see, governments around the world were bailing out banks, and it was a total crisis. A lot of people lost a lot of value from their dollars in these days, and it's almost like no one even realized that all of their money was being devalued. But Satoshi saw the problem and saw that the population was being screwed over, and he thought that the next time this happened, because it was going to be inevitable, people should have a way to opt out and not be on the hook for bailing out all of these banks and their bad decision. Bitcoin has never actually been through a real recession, and this was the last time that we saw banks being bailed out to this level. So it looks like Bitcoin is actually going to finally be seeing its original purpose be put to the test. And I think this is why we're finally going to start to see Bitcoin decouple from the stock market and from gold and everything else, because it's really the only option for an investment where the underlying asset can't just be duplicated and more can't just be flooded onto the market. Some people even think that this could be the last crypto winter because, as this article by CoinDesk says, please enjoy the final crypto winter. With US regulations coming soon, the frauds, schemes, and irresponsible investment management practices that led to the current market downturn will be things of the past. I actually think that this could be the last crypto winter because of mass adoption, but this says that it's going to be because of regulation. And I've heard a lot of people during this bear market actually say that we're not going to see the end of the bear market until there is clear regulation from US regulators. And while we might get some kind of clarity on whether or not some of these projects are securities or if they're safe to invest in or if the government is going to come after you for investing them in the first place, I don't think that we're going to see really clear regulation because let me remind you who we're dealing with here. This hearing happened about 5 years ago, I think, and you might remember whenever Zuckerberg basically educated all of Congress about how the internet works.
You said back then that Facebook would always be free. Is that still your objective?
Senator, yes.
Well, if so, how do you sustain a business model in which users don't pay for your service?
Senator, we run ads.
Even 5 years ago, how did these old kooks not know that the internet basically is paid for by ads? And this was really just the tip of the iceberg. These guys had no idea how any of these things worked.
If I'm emailing within WhatsApp, does that ever inform your advertisers?
No, we don't see any of the content in WhatsApp. It's fully encrypted.
Let's say I'm emailing about Black Panther within WhatsApp. Do I get a Black Panther banner ad?
Senator, Facebook systems do not see the content of messages being transferred over WhatsApp.
Yeah, I know, but that's...
First of all, you don't even email within WhatsApp. It's more of a text or an instant message. And on top of that, how do they not even understand what encryption is? I'm not saying that I believe necessarily that WhatsApp is encrypted, but they don't even understand the concept, and that's really what crypto is all about. The people that are making all of this legislation and that are supposedly going to regulate this industry are still trying to wrap their head around technologies that we've been dealing with since basically the beginning of the internet. The government still doesn't understand some of the biggest and oldest internet-related businesses that even exist to this day. And we're about to start moving on with Web 3 as companies like Facebook become irrelevant and Web 2 becomes a thing of the past. I think that in 20 years, the government is still going to be trying to catch up to where we're at right now with cryptocurrency. And at that time, we're going to be light years ahead as the government is still trying to wrap their senile brains around Web 2. So in summary, something in the economy is starting to break, I think, and we're starting to see the cracks forming. But if the Fed continues to raise interest rates and all of these things that are going to probably be hitting the economy in about July continue to slam into us, then we're going to see devastation and a recession that's going to be deep and hard. So as these old farts continue to run the dollar and the global economy into the ground, the people that have been paying attention and learning how this technology actually works are going to emerge ahead of everybody else as we come out of this bear market and we leave them behind as we build this new financial system and leave them as the dust in the wind that they are. Let me know in the comments, what do you guys think is going to actually devastatingly break in the economy first and cause the Fed to do that real pivot? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you guys next time. Bye. This is Ibisu. He's named after one of the 7 lucky gods of Japan. According to legend, he will bring wealth and prosperity to anybody who evokes his name. So don't forget to write his name in the comments or you'll bring dishonor to your whole portfolio. And check out this video right here. Say goodbye, Ibisu.